Okay, recording this video after close of trade Monday, 21st of March 2011, and interesting day in the market today. Just viewing some of my charts, and we had an update. We closed up at 1293 after a pretty big gap up. The action kind of overnight on Sunday evening was kind of a rise of almost, I think, about 20 points from the low. I'll show you what the lower time frame charts were showing, but today's activity was very low volume, only about 1.2 million contracts traded after seeing this huge spike in volume down at the 1250 levels. We've kind of bounced from there. And just to show you on the weekly chart again, the volume that we had last week was 16 million contracts traded, one of these kind of exhaustion selling bars type here, similar to what we've seen for example here in this activity. So it's not surprising that from these huge kind of selling volume bars we get kind of bounces, because it exhausts the sellers at that point, and then it's a question of how far up the bounce goes. Just in terms of sine waves, just been going on about this. This is the pullback in an uptrend. We've now broken above this. Just to note, this is the at es.d, so this is just the daily data, not the after hours session. If you look at the data using the after hours session, this is at ES, so that's the full 24 hours of data. You can see the pullback level printed pretty nicely down there at 1240, and we've bounced since then. So just going back to my hypothesis, this is the pullback levels kind of now we're above it. That's starting to hold. So obviously, as I've said before, I was surprised we broke through it so sharply, but obviously news events out of Japan kind of drove that, and we're kind of heading back to some kind of test at the highs when we'll get a cyclical turn. But today's activity, with the extremely low volume that we had, potentially we could see a little bit of a retrace tomorrow, fill a gap, maybe kind of test where that bottom is, see if there's kind of more buying kind of comes back in. So that's a potential kind of scenario for tomorrow. In terms of the other markets, a couple of things I want to say. First of all, talking about this with the euro, and the move that we've had in the euro over the last 3 days has been pretty spectacular. And as I said, we had a bottom being formed in euro here with exhaustion selling, second cyclical term, flush signal, all this blue professional bar activity that we'd not seen into the highs, and now we've broken up to, we're breaking up to these kind of previous high levels. Friday's activity, was about a cent and a half, I think, move in the euro, and as I said, we've not seen any kind of exhaustion buying, blue professional bars and so on. So this move's going to continue on. Whether I'm not sure whether this means the risk trade is back on. It certainly means there's weakness in the US dollar, and that's really what we've been seeing kind of translated in a whole bunch of things. So gold and silver are going up as a result of kind of weak dollar and so on. I had a real think about my kind of multi-market stuff over the weekend, whether I really can see signals between multi-markets, when the risk trade was on, everything was moving together, you can see it happening. But now these days I'm seeing less kind of connectivity, and really need to focus on the day-to-day signals in the market. But anyway, just to point out, euros making a very strong move, and it's because this isn't moving over, because we've not seen this kind of inverse pattern here. If we go to the Aussie dollar, same thing. I mentioned this in the last video. This is kind of professionals acquiring down into these lows at 96. We'd had a flush signal down here, cyclical support printed there, no supply. We're heading back to parity against the US dollar. And the dollar index is the reverse, the inverse of the euro chart, so exactly the same thing here, and we've kind of sunk through. I don't know how far we're going to sink on the dollar. At some point when everything goes wrong in the US and we get kind of a repeat of the 2008 collapse, everybody will rush back into the dollar, and treasuries will go up and so on. But these are kind of historic kind of low levels, support levels that we've had before, and we're just seemingly kind of sinking through there. Orderly decline, as Ben Bernanke would kind of want, but anyway. And then just lastly on the crude chart, I think I was speaking a bunch of rubbish yesterday, and last week a couple of people kind of called me on it with some emails, talking about crude being a proxy for global growth. Obviously what's going on in crude is as a result of what's happening in the kind of macro markets scenario, all the uncertainty that we've got in the Middle East and so on. So, I mean, that's what's kind of psychologically driving this. What's interesting for me, though, the last couple of days, you can see these amateur up bars and a no demand pattern up here into 105. Everybody's freaking out about kind of crude going to record highs, $4 gasoline in the US, blah blah blah. It's like, I wonder if this is, was this professional profit taking and then kind of retesting these highs. We get these kind of amateur up bars, kind of no demand bars, kind of into the highs, and then it kind of rolls over and goes the other way. So, that's something that was kind of interesting with this kind of pattern over the last couple of days. Looking at the bigger picture in terms of tick bar charts, 40,500 tick bar chart. This was kind of the destruction we had last week with the E-mini going down to the 1240, 1250 levels, and you can see, I was talking about the amount of selling at this point down here was less and less. We'd had the exhaustion kind of selling earlier on in the piece, and this was really not very big in terms of exhaustion selling. Blue professional bars coming in with these bullish divergence patterns, and we've rallied kind of since then. We've not seen exhaustion selling, buying on the upside up here. However, we did see professional profit taking into the top of the move on Friday, and then buying back in at the bottom of the move at the end of Friday, and now at the end of today we had a little bit of profit taking, and we formed this pullback and an end of trend kind of sequence on this time frame. So this is what's making me think possibly we'll kind of drift back into the 80s and 70s to see where people kind of come back in and step it up for buying the E-mini. And when you look down at the 4,500 tip bar chart, which was the my trend chart for day trading, Friday's activity was really nicely kind of signaled. We had, coming into the open on Friday, we had end of trend warning signal, blue professional bars and exhaustion buying right up here, and as soon as we got this kind of bearish divergence signal, the market kind of slunk away. And then at the end of the day we had exhaustion selling, blue professional bars kind of coming in. This is second cyclical turn after end of trend, showing a potential change in trend, and then we rocketed from there, starting with the overnight session on Sunday in the US. And then today's activity, we had our end of trend, we've had blue professional bars at the high. This level was pretty extreme in terms of exhaustion buying at this point here, but wasn't enough to quite signal an exhaustion buying signal. It's of that kind of order of magnitude, but it didn't signal like this one. So I'm in two minds whether to say that we had exhaustion buying today. Certainly, the highs up there in the mid 90s kind of felt pretty exhausted, and we kind of rolled over. And when you looked at this on a 1500 tip bar chart, you can see all we were doing was just kind of rolling over. We had end of trend warning signal kind of early on in the day, and it just batted backwards and forwards between these levels like this. Just unbelievable. Bang, bang, bang. You can see, better sine wave kind of catching each of these as we rolled over. So I'm just wondering if this is kind of a slow rollover at this point, kind of coming back, and we'll come back down into some kind of gap fill and see where the professionals kind of want to pick this up. Because I'm still thinking that on the, if I go to this chart, on a daily chart, we've still got a few days of upside momentum to go before we kind of retest back up here and get a cyclical cross for an end of trend warning signal. So that's kind of what I'm thinking about so far. Just a minor kind of point, I upgraded to TradeStation 9 over the weekend. Actually went pretty smoothly in terms of all the better sine wave indicators for the TradeStation users. I didn't see any differences at all. Didn't need to. Obviously with the automatic upgrade, it kind of recompiled all the indicators and verified those, and there was no kind of problem with them. Haven't seen any kind of charts change between 8.8 and 9.0, so nothing there. But in terms of, is it worth the going up to 9.0? I think you should do it because it's been out for a while and it's kind of the best around. But in terms of extra features, speed, anything like that, frankly, I don't see anything at all that kind of makes this a must to upgrade to 9.0. I haven't seen the charts been any faster, so that's kind of a little bit of a disappointment. So there we go. Hope your trading went well today. I'll tack on. I was kind of late to start trading today. I'll tack on my day trades after this. See if you. Keep watching if you're interested. I just got short 95 even, and got a second cyclical turn after end of trend on the 500 tip bar chart. We had existing home sales come out, cause some volatility. Coming into these highs, we've got blue professional bars on 500, and it's a flush signal here, but it was being led by the amateurs. You can see the breakout was a Rambo. Amateur up bar 1500 2-bar chart. So this will probably be, looks like a flush signal on 1500 2-bar chart up here. Could be a little early. But anyway, so short 95 even. It just came out at 94.75. Just because coming to a cyclical turn on 1500 2-bar chart, this last kind of push down was kind of led by the amateurs. You can see Rambo patterns into this turn, and then this last little push down being led by the amateurs. So just wondering if you're going to test back up to 96. Could be a better re-entry point later. So just out 94.75. Okay, just short of 94.75. So a little bit early on a cyclical turn on the 1500 2-bar chart here, but just coming back at a 95, had all of these bearish divergence signals. Blue professional bar at the highs here, up at 95 on the 500. So just looks like we're rolling over here. So there we go. Cyclical turns just printed on the 1500 2-bar chart with bearish divergence. All of these are really close to the zero line in the 1500 2-bar chart, and this last move up you can see was being led by the amateurs here. So okay, short 94.75. Let's see where this goes. Okay, just came out at 93.25, and the reason for doing that just at this point here is a couple of Rambo patterns come up on the 1500 2-bar chart. We've got a cyclical turn coming in here. Was kind of an area of support kind of earlier on this morning, and you can see cyclical turn on the 500 2-bar chart. Just think we're going to have a little bit of a bounce back up at this point, and there'll be another kind of re-entry short opportunity. So just out at 93.25, just long at 93.50, and the reason for getting long is cyclical turn about to print on the 1500 2-bar chart. Coming into this low, first of all, kind of Rambo patterns on 15, so the amateurs kind of leading down here. Then professionals just kind of stepped in at 93 here. Bullish divergence, and just think we're going to run back up a little bit on this cyclical turn. Okay, a few minutes later, had to sit through a lot of just kind of toing and froing here, but it's kind of broken out nicely to the upside. You can see the last time we kind of tested the lows, the professionals kind of came in here. You had professional bars here on the 500 and the 1500 2-bar chart, and nicely down at 93 we had an exhaustion selling signal, so we're kind of basically pushing out from that. So now we've had one on the upside, blue professional bar, 1500 2-bar chart, exhaustion buying, cyclical turn happening, so there'd be a good place to get out. About 96 would be nice. So yeah, let's see if we kind of get pushed out. Bingo just got taken out at 96 for 2.5, which is good. 500 2-bar chart, we've got Rambo patterns right at the highs here, but no professional blue bars, which is kind of interesting. Whereas this kind of push up on the 15 was led by with a professional kind of up bar here, so it shows weakness. It's kind of like a double top maybe forming. We had 96.25 was the high earlier on today, so we're kind of testing back up with these blue professional bars. Be interesting to see if this will be a blue on 4500 2-bar chart. Anyway, so just out at 96 for 2.5. You've just gone short 94.75, and yeah, we got cyclical turns on both 500, 1500 2-bar chart. Double top potentially being made here, profit taking first time into 96.25. Second time in, we've got a profit taking and no demand up here. Kind of interesting, there's no blue professional bars up here on the 500 2-bar chart. I hope that's not going to come back to haunt me. But this move kind of being led by the amateurs, Rambo here, and professional profit taking here after exhaustion buying. So yeah, potentially a little bit of a run back down to 93, so short at 94.75. Okay, a few minutes later we've broken down to 1294. Retrospect, I was too early on the entry because I should have been waiting for a blue professional bar and or these kind of bearish divergence signals that kind of came in. So as soon as the low of that blue professional bar kind of got taken out, that looked like the first kind of falling through the ice type bar, and now we're kind of below